What's up guys, welcome back to my channel. In today's video we are going to be going over how to set up an annual budget. If you're new here, hey, I'm Lauren, and on my channel we talk about all things personal finance, including my family's own journey to pay off six-figure student loan debt. So if you want to see more videos like that, then make sure you hit that red subscribe button down there. Setting an annual budget is such a game changer. We started doing it a few years ago and it really gives you a great big picture sense of what your year is going to look like, and it helps you set your annual financial goals because again, you have that snapshot of the entire year. So before the year even starts, you can kind of play around with things and see how things would look at the end of the year if you put more money into one category versus another. And it's a really great tool. It's a great way to get perspective on what you're doing for the year, and I couldn't recommend it more. So let's jump into it. Now, the spreadsheet that I'm using, you can get on my Etsy shop. It's an instant download to Google Sheets, and it's actually an annual and monthly budget spreadsheet. So today we're just gonna be looking at the annual spreadsheet, but it also comes with a monthly spreadsheet, which I use every single month, and I make videos on my channel every month talking about how, you know, our budget is going. The spreadsheet comes with a detailed video tutorial. So for like formatting and stuff and setting it up, it'll go over everything you need to know if you're not super comfortable using spreadsheets. And then it also has a net and gross budget, annual and monthly spreadsheet. So gross just means before taxes or any other paycheck deductions, and net means how much cash is actually deposited into your bank account from your employer, assuming you work for an employer, like how much cash do you actually get after taxes, health insurance, any other deductions come out of your check, what do you actually end up with. So this is the annual spreadsheet. This is the gross version. So this blue section right here that has taxes and insurance, that is, the difference between the net and the gross. If you open the net version, it's not going to have this blue section, but I'm going to do the gross version for today's video. And by the way, this video I'm going to be going over how to set up an annual budget, and then tomorrow's video that's going up is going to be how to set annual financial goals based off this example budget. So the two videos kind of go together, so just wanted to give you guys a heads up to look for that video tomorrow as well. If that second video is already live, I will make sure to go back and link it in the video description for this video, so if you want to watch it next, it'll be easy to find. So when you open the spreadsheet, it pretty much looks like this. It's a little bit different because all these labels aren't entered in there. I put these in. It's just kind of like blanks, and so you have to put in what applies to you. But to save time for this, tutorial, I wanted to preset the spacing and everything. So I know it's kind of zoomed out, but I feel like it's important to be able to see the whole year, so sorry about that if it's a little bit hard to see, but hopefully you guys can see it okay. So we're gonna start by going through the income. So this is just made up numbers. This is not based on anybody's real budget or my real budget. I just made up numbers for an example, so it's not necessarily realistic for you. So keep that in mind as I'm going through here. I know, like, for the grocery section, we spend way more than I put in this budget for groceries. That's just not realistic for us. So anyway, so starting out with income, if you get paid regularly, it's easy to predict how much income you're gonna make in any given month. And so let's say you get paid once a month and you know how much you get paid because you get paid salary, it's easy to fill in this income. If you make irregular income, it's a little bit harder, or if you make like bi-weekly income, it's a little bit harder as well, because some months you get 2 paychecks and some months you get 3. Let's say you get paid every other Thursday. 2 months a year, usually there'll be a third Thursday in a month. So you'll get paid 3 paychecks that month. So you gotta kind of be aware of those types of things as you're filling in the income. This is an estimate. This is not going to be correct. There's going to be changes, but the purpose of doing this is just to get an idea of what your year is going to look like, and so you can kind of plan accordingly, not to be exactly perfect. But if you do get paid every other week, for example, and you make the same amount every other week, then you can look ahead to the next year and see, okay, what month is a 3 paycheck month for me, or what month do I typically get a bonus, if you want to like count on that income because it's pretty guaranteed and stuff like that. So just keep that in mind. In this budget, I'm not doing any irregular income because it's just easier to do the budget that way. But yeah, so this family has 2 incomes for a total of $6,000 a month. That is before taxes. So, and I'm pretending that they make the same amount every single month, that they get paid like twice a month or once a month or something. This is a little trick. If you make your cursor a plus when you're clicked on a cell, you can drag it all the way over and it fills in the whole year. That saves you a lot of time. So you can see over here is the annual total that automatically totals as you fill this in. So this person for income 1 makes $42,000 a year and income 2 makes $30,000 a year for a total household income of $72,000 per year. All right, based on that income, I'm guessing their tax bracket and estimating what taxes would be for that amount of income and putting that in for the year. And then we're also going to say that they have insurance that comes out at $400 a month and that they elected to contribute to an FSA, which is a way to pay for medical expenses pre-tax. Some employers offer that, some don't, but in this example they do. So that's a pre-tax deduction from their paycheck. So now we filled in all the taxes and insurance, and we can see that their total taxes and insurance is $1,945 and totals to just over $23,000 for the year. Okay, next, 401k deductions. So I'm just gonna put in here 200. Maybe they're trying to get an employer match, so they're just putting a little bit in there, and then I'm gonna put 500 towards a Roth IRA. Maybe one person is fully funding their Roth IRA because the max for a Roth IRA for 2021 and 2022, actually, I think it just came out, is $6,000. So one person can contribute $6,000 to a Roth IRA, which is an after-tax retirement account. So they might be putting $500 a month into one person's or $250 into two people's. But either way, $6,000 is what they are budgeting for the year for a Roth IRA. And then also they want to build up their emergency fund a little bit in this example. So for me personally, I wouldn't really put that much extra to retirement or even debt payoff if you don't have a basic emergency fund. But in this example, I'm assuming they've got a small emergency fund that they want to just kind of build up over time. So they're going to put $100 a month towards that emergency fund to build it up over time. Okay, so you can see that's $800 a month total to savings and retirement, and then that puts them at $9,600 for the year towards savings and retirement. And in this spreadsheet, everything's in this order intentionally because for me, it's like the order of priority. If you want to accomplish financial goals and make progress on your debts and your investing and stuff, like those need to be top of mind. So as soon as we've got the income and we've got the taxes entered, we go on to pay yourself first, which is savings and retirement, and then debt before we even get to the expenses. Now, realistically, if you fill out this budget and you get to the bottom and you see this left to budget amount in this row is a negative number, then you're gonna have to adjust things. And sometimes the money towards financial goals is what has to be cut back because you've got bills that can't be negotiated. So in this budget, it's gonna end up even, but I'll kind of show you what I'm talking about as we go through. So this family has 3 different debts, and so their credit card payment is $55 a month, and so we're gonna say they're gonna pay the minimum on that, and then $250 for a car loan for that debt. And then we've got a student loan here that is $100 a month. And then we've got extra debt payments that they're gonna make of $100 a month. And you know, let's say their credit card balance is only like $300 or $400, and between the extra payments and the minimum payment, they're gonna have it paid off by May. So for the rest of the year, that would be 0. So we would zero that out, and you would know that you could, okay, put an extra $55 towards extra payments towards your next debt or whatever the case is. So as you're going through this, you really have to focus on your whole financial picture and have a good sense of what all your balances on everything are, because as you're planning for the year, you need to know, like, am I gonna have something paid off? Or maybe your car loan only has a couple months left and then it's paid off. And so after March, that's gonna be 0. And so you know that after March, you can take that $250 and put it towards something else. Maybe you wanna put it towards debt. Maybe you want to increase the amount you're putting towards your Roth IRA or something like that. So you can play around with it, but it's really important to keep a good eye on where you're at with all your debts and everything. So as you're putting this together, you know what to expect for the year. Okay, so we're saying that they've got rent of $950 a month and life insurance of $20 a month. Internet is $75 a month. Cell phone is $75. Car insurance is $100. Subscriptions $30, and unexpected $50. The other thing you can do is you can just put everything for 1 month, and then you can drag all of it over at once. So that's another trick. One thing to keep in mind is, like, let's say you have an Amazon Prime membership and that's a once a year charge. I forget what it costs. I think it's $120. So this is the time to take into account those things. So if it's $120 this month, subscriptions is going to be $150 if you're going to put it in the subscriptions category, or you know, wherever you think that it makes most sense for your budget. You could even add an extra line just for Amazon Prime, but then you're going to have zeros all year long, and then one charge one month and zeros the rest of the year. So if you wanted to put it in this month, you could also right click or double click depending on your computer, and then hit insert note, and you could put 120 Amazon Prime, so you know that comes up once a year. The other thing you might do is maybe car insurance is quarterly instead of every single month. Then you're going to want to account for that by putting, you know that it's due in March and June and everything like that. So you put zeros in these other months and you adjust it. And so you can see, like, you know, certain months are going to be more expensive than others because that's when you pay your car insurance. Now for regular expenses like that, if you pay something like twice a year or quarterly or something, I like to put that in the sinking fund section because I like my budget to be as consistent month to month as possible. So even though you have a bill every quarter, let's say for car insurance for $300, instead of having an expense for $300 one month, I like to put $100 a month aside every single month. And then when that expense comes up, I've got the money there and I've been saving all year round, so I don't have this big spike in one month for a bill. That's just what makes sense for me. That doesn't necessarily work for everyone, but that's how I like to do it. Okay, and then in this example, I'm saying that they're gonna be adding $100 a month to their mini emergency fund. I've talked about this before in our own budget videos and other videos. We have like two emergency funds basically. One is the one that's in our checking account, and then one is in a separate account. And so in our checking account, it's like a buffer for when we pay bills. We don't have to keep so close track of when we get paid and when bills come in because we have part of our emergency fund as like a buffer in our checking account. So I really like doing it that way because it just makes it easy. Next, I'm saying groceries is gonna be $600 a month. Vacation fund is $25. Personal spending is $150. Child expenses we're putting at $100. Pet expenses $50. Gas $75. Car maintenance $25. Household maintenance $75. Utilities $100. And Christmas $100. Okay, so I'm going to do that trick and pull this over. So you can see right now already that left to budget is 0 for January, and that's because I've entered in all the numbers. And the total income of $6,000 is the same as the total monthly budget of $6,000, so that's why there's 0 left to budget. If child expenses were actually $300, then you could see your negative $200 for the month there, and so you know you need to go back up and adjust something like put less to your Roth IRA, for example, and so you get yourself even again. And that's why this is such a good exercise, is because you can see kind of what to expect for the whole year before the year even starts and really set some good goals. Okay, so this is showing negative right here because I had put in Amazon Prime. So maybe that month we put 0 right there for the emergency fund, and we only put $80 for this part of the emergency fund. So that's why it's good. You can like play around with it depending on, you know, if you have a really expensive month and stuff like that. Also, let's say, you know, you get an extra paycheck, or let's say you get a bonus in June. So in addition to the $3,500, you get an additional $1,500. Then you see, okay, I've got an extra $1,500 here. What do I want to do with that money? Do I want to make a really big debt payment of $1,655, or do I want to make a debt payment of $1,000 and then instead I'm going to put the rest towards our emergency fund? You know, you can play around and see how it's going to look based on the different options you have, because you're looking at it all at once. The other thing that's nice about doing an annual budget is looking at this annual total. So you can see, okay, we've got $73,500 coming in. Of that, we've got $10,235 going towards savings and retirement. So if you take $10,235 divided by $73,500, you can see that they're contributing 0.139, so that's basically 14% of their money towards savings and retirement. And really the rule of thumb is you want to be contributing 15% of your income to retirement. And so if you don't even count the $1,800 that we've gotten here going to savings, then they're definitely behind on what you'd want to savings and retirement. Let's see, they would be at 8,400 divided by 73,500. So really going to retirement is like 11.4%. So maybe they decide, you know what, we feel good with our emergency fund. We're gonna cut back a little bit on these extra debt payments, and we're gonna really put more towards savings and retirement. You can also get a good sense of where you're gonna be at the end of the year with your debt payoff. You know, based on these numbers, they're putting $6,000 in the year towards debt payoff, and a percentage of that is going to go towards interest. So they're gonna pay off less than $6,000 in debt that year. Depending on how much debt they have, that may be acceptable or unacceptable. So that's something that they can look at and decide. This is also really helpful when deciding like how much can we afford. So let's say at the beginning of the year, you know, income 2, they learned that they're gonna get $1,000 raise. So then we've got $1,000 more to play with, and you have to increase the taxes. I'm not gonna calculate exactly what that would be, but let's say the taxes would go up because you pay taxes on your raise. Now you've got an extra $820 to work with. This is a really good problem to have. You get to decide how we're gonna use this money. And if you say, hey, let's just spend it on fun stuff, then you're looking at your whole picture and you're saying, okay, we're gonna spend $10,740 on fun stuff, and we're only gonna put $6,000 towards debt this year. How do we feel about that? Is that in alignment with our goals? So that's the other thing that you can do is if you get raises and stuff throughout the year, you can update it and look at how you're doing and compare it to your goals for the year and see what makes sense to do with that extra money. And you're not kind of just like deciding blindly based on your feel of how you think you're doing. You've got a concrete thing to show you how you planned out the year, and you can check where you're at based on your goals you set before the year started. Once you're done, what I would recommend doing is duplicating this. So you go down to this tab down here, you right click or double click, and then you hit duplicate, and then I would rename it to actual instead of projected. And then as you go throughout the months, I would update these numbers and see what you're actually putting in. Because whatever you project is not going to be exactly what you end up doing, and some months your income may be higher, or you may get sick and take some time off, or you may get a big raise. Like, it's just going to be different. Your expenses are going to be different. It's every month has something a little bit funky with it. So by making a copy and then going back in every single month and putting in your actual numbers, you can then adjust as the year goes on. So you can look at it 6 months into the year and say, hey, you know, in our projection, we wanted to put $6,000 to debt, and we're halfway through the year and we've only put $2,000, we're behind. Or you can say we wanted to put $6,000, we've already put $6,000 to debt. Wow, I can feel really good about how I'm doing. So that's something that we do. We set our annual budget, the projection of our annual budget, and then each month we go back in and we enter in the actual numbers in a duplicate spreadsheet, and so we can compare what we plan to do to what we actually did for the year and see how accurate we did our annual budget, and that helps us improve year over year with setting our annual budget. The last thing I would say is, you know, just again going back to these annual totals, you can see, hey, we're paying $1,200 a year for car insurance. Like, can we do better than that? Is there a company out there that can beat that can do $1,000 a year? Or we're spending $7,200 a year on groceries. Does that feel like the right amount? Or do we feel like we want to push to cut that? Or do we want to give ourselves a little more leeway because that's not enough with inflation and all the grocery prices going up? So I like looking at this annual total a lot because it tells you a lot about how much you're going to spend in any category for the entire year, and doing an annual budget is really the only way to see it from that perspective. So that is it for today's video. I hope you guys enjoyed this and found it helpful. If you've never done a budget before, I really recommend starting out the new year with doing this annual budget, even though you've never budgeted before. It's a really good exercise to get you kind of in the groove of what your budget is going to look like on a monthly basis. And all you need to do is just go back through your bank statements. Unless you spend everything in cash and you don't keep receipts, then it's going to be a little bit harder to make this budget from nothing. But I mean, just piece together what you can. It's going to improve as you do it over time, so it doesn't have to be perfect or right the first time. You just have to get started. But if you do spend money through your checking account, then just print out a year's worth of bank statements. Most banks have that information available for you online. If you just log in, you can go to all your statements and print them out, and you can go through and say, okay, how much should we spend what were the different categories, what were the expenses that came up, you know, once a year or quarterly, and you can start putting together a picture of what your budget looks like. And it's gonna be a lot of work at first, but it's really worth it, and it gets so much faster as you go along. So don't be intimidated if you've never done a budget, saying, oh, well, I don't budget monthly, so how am I supposed to do an annual budget? Like, I think an annual budget is a great place to start if you've never budgeted before. If you do budget monthly, hopefully you kept those budgets, and that's a perfect way to put together this annual budget, because you can go back through each month and say, okay, what did January look like? What did February look like? What did our utilities cost? What were our subscriptions? What were our groceries? And you can, you know, average things out, or you can see what months are more expensive. Maybe you always travel in July for summer, and so you know you need like an extra, you know, however many dollars, hundreds of dollars for food that month because you end up eating out a lot instead of cooking at home. So those types of things, the more you can build in the expected expenses into your budget, the more you're gonna feel satisfied by your progress and how you're doing, because you're not gonna feel behind when you've missed things that you could have known were gonna come up. If you like this budget template that I showed in the video, I do have it available for purchase on my Etsy shop, as I mentioned before. It is linked in the video description. Thank you guys so much for watching, and I'll see you guys tomorrow for part 2 of this video of how to set financial goals based on your annual budget. Bye.